And what is up everyone, Andrew here, and in today's video I'll be going over my thoughts as well as analyzing what I think about the upcoming IPO of 17MediaEntertainment, or stock ticker YQ. So let's read a little bit of their company description right off of the NASDAQ page that they have. So they operate the largest live streaming platform by revenue in developed Asia with a market share of 19.2% in the first quarter of 2018. In their home market of Taiwan, they represented 36.1% of the live streaming market, and they're ranked number 1 among all live streaming platforms in terms of revenue with a market share of 38.6%. So those are pretty good numbers that they posted, and we know that their home market is in Taiwan, but they're also pretty big in Hong Kong and Japan as well, where they have increased their market share quite a bit in the last 2 years, it seems. So by far and wide, their largest product right now is their live streaming platform, which is 17Media, and they have 33.3 registered users, but they only have about 1 million average monthly active users. Not the greatest growth compared to 2017 versus 2018, it feels like. However, with 3 months of 11% growth, seems alright. So 17MediaEntertainment also owns and operates Paktor, which is a Singaporean dating app, and Goodnight, which is another dating app. And these do look like they're growing respectively pretty well still. 14.6 million up from 13.9 million in a 3-month period. However, these don't contribute to as much revenue as their live streaming platform. I believe it's something about like a 90% versus a 10% split, where 90% of their revenue is their live streaming, but only 10% of the revenue is their dating apps. One of the things that I want to point out that seems promising though is that they say we are in the process of integrating our live streaming platform into our online dating applications, and our integrated platform had 47.9 million registered users and 1.7 million average monthly users. This could be something that's really good. And if you take comparisons off of what we've seen in China from Momo, which was a dating application, and they pivoted to something more live streamy, we can see that M17 is going for more of an integrated approach. So this could work, it might not work. If it does work though, I could see it becoming very successful. So I want to move on to taking a look at this techinasia.com article that talks about M17 and this IPO. So we can see that from the first quarter in 2017 versus the first quarter in 2018. This is a quick visual on how their revenue and expenses have gone. We can see that they're still not profitable, but their revenue has grown significantly. So they're doing what any other company that's going all out into growth are doing. They're just dumping whatever money they can into increasing their revenue. However, we can see that their expenses as a share of revenue, which I think is a more important and telling metric to look at, we can see that from 2016 to 2017, we can see that the cost of revenue went down, the selling expenses went down, and operating losses went down a lot as well, which is promising. Taking a look at Q1 of 2017 versus Q1 of 2018, we can see that these have once again gone down, however not as drastically. So this article goes on to say that despite the improving financials, it needs to buy time to become profitable, which is something that I agree with. We can see that yes, they're improving their financial metrics, but since they are still not profitable, they need funding. And this leads me to my biggest problem with M17 at the moment. So it says that user base has been growing much slower compared to revenue. So while their revenue growth has been doing well, their monthly active user growth has not. Now, this is something that I think is a lot more worrying, to be honest. While they're growing their revenue, which is great, that basically means that they're just improving their margins. However, I would like to see monthly active user growth. We can see that from Q2 to Q3, actually, back in 2017, they actually lost monthly active users, and now we are stalling at about 1 million monthly active users, and I don't think this is the top at all. So I think this number right here should be growing a lot better. I think M17 needs to be putting more focus into getting users, and once you have a lot of users, then you can turn that dedicated and loyal user base into a more profitable business model, and that's totally okay. If you're starting at a business model in which you have good profit margins, that's great and all, but if your user growth is stagnant, if your users growth is not going anywhere long term, I don't think that is a good idea. So the one thing that is a silver lining here is that in terms of paying users, so I'm guessing something more like a paid subscriber, they have been able to double it to 3.1% of total users in the last year. Going forward, we know that they are the leading player in Taiwan, but I would like to see M17 increase their market share in Singapore, Hong Kong, Japan, and South Korea. And if they are able to grow largely outside of Taiwan, that could be a huge untapped income and revenue stream that they can get as well. So summing up the risks with M17, they need to be able to grow their monthly active users. I don't care if their profits are getting better. If this monthly active user metric is not growing, I am not seeing a good future. Second, they need to continue their dominance in Taiwan, they need to grow their market share in all these other Asian countries, and they need to fend off the big players from China, such as YY, Huya, and Momo. If M17 can accomplish these tasks, then they will become very big. This industry is still growing, and this industry is still getting more and more profitable, so I expect good things out of a company that can establish dominance in this sector. So going back to talking about the IPO itself, like all IPOs, I would definitely expect volatility in the beginning stages. Overall, M17 is quite a tempting IPO for me, to be honest. I think that they are a more risky one to get into. Their profitability depends on a few key things that they have to get right. But if they do execute properly, then the upside can be ginormous. So compared to the last IPO that I reviewed, IQ, which has done very well, I would say that M17 is quite a bit more riskier with a decent amount of more possible upside. So just take that into account. So that is going to do it for me on this IPO review of YQ or M17 Entertainment. I hope you have all enjoyed this video or taken something out from it. If you enjoyed this video, please be sure to drop me a like. If you have any questions, leave them down in the comment section below. And if you haven't subscribed already, be sure to do so for more stock related videos. And I will see you all in the next video. Thanks for watching.